Okay, everyone, and welcome back to the Morning Edge webinar. And let's go on and get started on the charts. So we had a very nice run here in the euro, and as I mentioned before, a daily close above 762 would open the door for 859. And I think that's still a possibility, but we are somewhat stretched already in the euro dollar. And let's take a look at something else. As you can see here in this lower corner, we did get that daily close here, right here in the euro, above this 762, which, as we talked about, we would need that. And you can see how initially it was fighting that 762. We were able to get above it. I think that still opens the door, as we talked about, a move to 859, that or potentially even higher. That being said, we've already come a little ways up here, and we're seeing that the bond market we're starting to get some fatigue here. I mean, the bond market really ran everybody over. We talked about this move being reminiscent of the move that we saw when it was down here in the depths and made that run all the way up here to 52.24. You can see we had a dip. We kind of sat there for a while, hung around here, and then we had the dip, and then we made a return rally back up here. This move yesterday was very reminiscent of that same move that I was telling people about, and I was surprised to the extent that it really ran over people, big time. But obviously this was predicated by what was happening here in the equities, as we saw a pretty good hard sell-off here. I mean, big sell-off. So obviously people ran for the safety of the bond market. That pushed it higher. I think we're stretched here. There's no doubt about that. But people are still concerned. They're not going to give up the ghost, so quickly on the bond market here. You can see here with the bond market when that run to 52.24, we hung down here, we started to come off, and then we rallied right back up here. I think the same thing is here. Is I don't think the bond market, we're not in that mode right now. We're just going back and forth when you're trading in the zone, and they quickly turn around, sell it, buy it back at the bottom of the zone. The market got scared for a good reason yesterday, which is what happened here in equities. And even though we've come into a key level here, here's 23.35, 23.32, we showed here's a 38% of this entire move here. It still doesn't mean that the market, everybody's going to say, okay, everything's okay. No, people are, concerned. They came in, let's say a retail investor, and so what the heck happened? And so at this point, you're probably going to get some early morning selling as you come into the cash equity open. So we could make lower lows. I just think that after a while, it'll start to quiet down. And you're seeing here on the bond market, on a 5-minute chart here, come down to 12, we're already up six ticks. I don't think, like I said, it's going to give up the ghost, so it doesn't mean that everything else, it just all of a sudden say, okay, everything's okay, they all clear, let's reverse our positions. Now, I think that, like I said, we can still go higher in the bonds. I think that that we are going to run into some fatigue here, and as the market settles down, then we'll see people saying, hey, wait a minute, it's too expensive to buy bonds at this price, and we'll see that change. So let's go back again to the 2-hour charts and see what we're talking about here on the euro. We showed earlier the 30-minute chart, and we got stretched here. Even as the bonds were making the highs, the euro was having a hard time getting beyond this 819 area here. And we came down here to 777. We bounced off of it, and it's still having some trouble up in here. Now, like I said, the key will be let's watch the bond markets, how it makes it up here. But the euro's already shown its own fatigue, even when the bonds were going higher, which was negative for the dollar as yields went lower. The euro wasn't able to move a whole lot, but off of that to add on to those gains. But we already had a pretty phenomenal run as it was. So let's go into the 2-hour chart now and see where we stand. Now the old high is 829. Let's say that the bonds, let's say we do see that, retail investor selling at the cash equity open, feels a little another run here in the bonds, a little bit higher. If you goose them up, obviously we have that resistance. The old highs here was 829. We'll show you that right there. But I think we have to give it some room here in case we were to see that. So to think that, okay, if they take out 819, they're not just going to go, in all likelihood, 10 pips higher and then have difficulty there. They would hit some stops. Once again, I think the euro's really extended, but like I said, we could have one more pop if we get the bonds a little bit spooked on some further equity selling, some follow-through selling. That could open up the door. So I think we do have, at this point, we have to go and put this 859 to be realistic here, in case they take out that 829. It may not even make it up there, but I'm saying is we could take out 829 and run out of gas around 843 or something like that. But I think we have to be realistic and put this price here. So we're going to give it its benefit of the doubt here. And support, we talked about this 758. We're going to come back a little bit further on this. We'll put it there for 752 right now. Now we know in the daily close we need to keep that 762, but like I said, we could go in and dip in a little bit further. We'll have to keep an eye on what the bonds are doing. Everything's going to be pushed up on what happens with these bonds. If the bonds, let's take a look, into the cash equity open, because if that comes under pressure, that's going to push the bonds up higher and obviously allow the euro to go up higher at that point. So let's go move into the cable. Yesterday we had 2503. We had 2503, we got up here, and that's just going on technicals, no big thing, it was right there. 2503, high looks like it was 05 or 06. So resistance now at this point, if we were to make another move up here, we'll come in, looks like right there, which should be something much higher. Not much higher at all. 2519, we'll call 2519. We're pretty stretched here in the cable. That 78% would be well up here. The 25.79 like I said, once the dollar came under an intense amount of pressure, I don't expect that. So we're going to go and keep this here for now. We'll go in the market off nonetheless, though. But which happens a lot, from time to time with the cable when you get these quick upside moves up here. We've seen that happen before. Pull this back here. You see here where the market really just stretches them out and just runs over all the shorts. We basically saw the same thing here. The market was holding up really well. They took one quick dip down here, and then from there it was blue skies ahead. Support, we're going to get it all the way down to this 24.14, the bottom of this zone here. Probably see some minor support come in right in here, but we're going to give it some extra room, 24.14. Obviously, still quite bullish here. Bonds are 50-12, just kind of hanging around here. Like I said, you'll probably see some upside pressure on the bonds as we come to the cash equity opening. We expect to see some selling come in there. And just kind of going and save these charts. So let's go move into the Aussie now. And we've seen the Aussie going and back off in this area here. They tried one more challenge above the 77.31. We said if we got a real big upside, and we had the opportunity for a big upside as the dollar really weakened yesterday, and we just simply couldn't get above here, and we started going to come in and weaken here, and it moved lower. So when we look at potentially where it could go, obviously a little bit of support here, but we're just going to go with keep it simple here and go with the bottom of this zone, which here is the 76.09. We'll take a look at a fib also, see if there's any confluences. $76.20 will be the 50%. We want to dip below this zone here. For today, we'll mark off the support for 76.19 for today. Obviously, you need to go move this back down to the 77.41. But it had, it looks like we'd continue to be a little bit under pressure because this had all the opportunities right now, or not right now, but yesterday to really make a boost and run up there. And they simply couldn't do it. And the dollar was really, under some pretty good pressure with bond yields continue to move lower at the time. We're still struggling here up here in the bonds. Like I said, I think we're getting a little bit of a bond fatigue at these prices. So we'll take a look at the Kiwi now. And at least here on the Kiwi, we did get an upside move, and then we've since, given that back. You can see here we ran up here, which we did before here on this 38%. They were able to go and take that out just a little bit and started to trace back. Now, we did give these markets a little bit of extra room because we thought, hey, this dollar may continue to come under pressure. I think we put the resistance here at 71.10. We can take a little bit closer look on this, and we did make it at 71.10, and support was at 70.10. I think that still stands on the 70.10 for the support, and that comes in right here. We'll move this over. As far as resistance, we're going to go with the 70.80 here. Obviously, this market remains bearish. The only way we could say, or at least I'd feel comfortable pointing out, it's in a range, is if we get above 71.10. But if you back this up further, you can see as long as it's below that bias pivot, it's bearish. Now, if we can get two consecutive 2-hour closes above 71.10, okay, now we're in a range. We're just vacillating probably between this bias pivot and the lower end. But for now, as long as we can't get, like I said, we only made up to the 38% we got, and the market got slapped back pretty good. So at this point, got to be more apt to go on and believe, like I said, that it still remains quite bearish here on the Kiwi. And there's nothing to suggest it. It's going to turn around. At least they're not going to turn around dramatically in any way whatsoever. When we get back, we'll start on the Canadian dollar. That's what we've processed so far on the bias chart. And thanks for joining us here on the Morning Edge webinar.